Hi everyone, Andrew here again. In this video I want to talk about a risk that I don't think enough people have covered off and often are perhaps naive or ignorant to, but it's really important that it is considered and thought of seriously. Now, when we talk about risk, people often see it in the context of investment risk, that the values of your pensions and investments will fall when stock markets crash. Often it's referred to in the context of inflation, and any money that you've got in savings doesn't maintain its purchasing power because of the effect of inflation. And people also think about the risk of a bank or other financial institution taking their money with them if they become insolvent. But a more likely risk these days is the risk to your earnings if you have an accident or an illness, or unfortunately die too young. And it might be that you leave husbands and wives, partners and children financially exposed in the immediate term, but also in the long term as well. Or if you just have an accident or illness that prevents you from working for a period of time, you don't have enough money coming in to pay the bills now, but also it means that you're not able to put enough money away for the future as well. So this is where life assurance contracts called family income benefit and income protection can really help build your financial resilience and ensure your financial security should the worst happen to you, and to make sure both you and your family are protected. Now, there's a number of reasons why people don't have this covered off sufficiently. It might be just naivety and just ignorance that these contracts exist, which is perfectly understandable. It might be just a feeling of being bulletproof and you've never had an accident or an illness before, so you're probably not going to get one. But I'm sure we all know people who have died far too young or had an accident or an illness that's caused them a big financial shock that's very hard to recover from. I've also heard people say that they're skeptical about taking out such a contract and paying the premiums and finding that the insurance company won't pay out in the event of a claim. But these days, life assurance companies are very good at making sure they pay those claims out. And it's really only if policyholders haven't been upfront and clear enough about conditions that they might have, which might prevent a claim being paid. So my call to you is really think hard about your exposure should you have an accident or an illness or you die. What will that mean for your loved ones? And make sure you cover those gaps so that you've got financial security for the long term. I hope that helps. If you've got any questions, please do get in touch.